2018, I co-founded Artos Systems after noticing a big gap in the enterprise blockchain market. We were seeing two sides where you had these very use case specific full stack solutions, for a particular vertical. And then on the other side, these sort of blockchain APIs. But there was no one kind of in between, catering to both business teams and development teams and prioritizing versatility. So that's the gap we sought to fill. Today, like I say, it's a case study of an existing client. They're based in the UAE, and they're a metals exchange and a facilitator of financing of mining projects.
Annika, we still cannot see your slides, unfortunately. Maybe try doing it again. Maybe stop and do it again.
Sure. Let me try.
Okay, it's loading. If that doesn't work, you might have to email me. Sure. Oh, no, that's working now. That's good now. Okay, brilliant, excellent. Okay, all good.
Okay, excellent. Hopefully it's still working now. Oh, nope, it doesn't look like it.
We saw the first slide.
Let me just try this again. Here we go. All good?
Not yet. Can't see it just yet. It's kind of loading. Now I can see the first slide. Try the second one.
Yeah, sure.
Yeah, good.
Okay. Sorry for this technical glitch. Let's continue. So today's presentation, like I say, case study of an existing client. And when we started working with them, our objective was to, of course, solve existing problems that they had around, trade confirmation time, disproportionate investor risk, and limited financing options for mining projects. And so we look to leverage blockchain to solve this problem by implementing trade infrastructure that would facilitate this. And the initial results we saw after 3 months of being in production was a 90% reduction in trade times and 60% faster settlement times. So today what I'll do is I'll give an overview of the exact client problems, the solutions that we provided through Artos, and a walkthrough of a short demo, essentially, that will show exactly what we did. So who is Artos Systems? What do we do? Well, our mission is to build trust between you and your customers through blockchain technology. And we do this by catering to both business teams and technology teams and prioritizing use case versatility. So not just one use case in one vertical, but multiple of them, because we know as our clients start to use the technology, they often have different needs that come up, and we want to be able to cater to this. And our goal, our ultimate aim, is to be the operating system of enterprise blockchain. And we do this by providing dedicated modules of defined business value that are almost like Lego blocks that can be combined to form these different use cases. So how are we different than what else is out there? Well, we're actually in production today with over 15 clients, 13 different countries, and 5 verticals, including mining and metals, fintech, retail and loyalty, media and entertainment, and other commodity segments. We have this blockchain technology that's different than what's out there in the market because we're able to fuse the benefits of sort of permissioned blockchains like Hyperledger and public blockchains like Ethereum without compromising on the benefits of either and without the shortcomings of kind of either paradigm, whether it's permissioned or public. And we are doing about 1.5 million transactions a month. So there's a fair bit of volume going through there. And like I say, we provide these dedicated modules, these Lego blocks of functionality that can be combined to solve, in an ideal world, any problem in any vertical. So moving into the problems that we saw with our client, the first one was slow trade confirmations. And what we were seeing when we were discussing with our client, analyzing their processes, it was these slow and manual information exchanges amongst stakeholders, documents being sent and then forwarded, all these things. And it was often paper-based. And data was prone to manipulation, and version control was an issue. The second issue in trade confirmations was these repeated steps of data reconciliation that were occurring in different systems of different stakeholders. This data needed to be verified, they needed to communicate about it, and ultimately there were still trade discrepancies that were costing a lot of money to be resolved. Finally, we saw that approval processes for inputting certain data, executing certain transactions, were inefficient and sort of siloed across these different stakeholders. And because of that, they kind of needed to communicate them back and communicate data back and forth. And really that created further delays in these trades actually going through. And these approval processes were difficult to audit as well. So anytime it was talking about regulatory reporting or adherence to compliance requirements, that was becoming difficult. So the second problem that we saw was this disproportionate investor risk. So investors didn't have enough visibility over the mining project's life cycle, the milestones they were hitting, any kind of due diligence that was performed. And that made it really difficult for them to perform high integrity risk assessments. There was also a lack of transparency and kind of onerous processes around title changes and actually gaining ownership, regardless of the way that you ended up financing the project. And these took long to verify, sometimes had errors, and it was like an untrustworthy kind of process that people were complaining about. And finally, pricing data was opaque. It was siloed at different exchanges, different systems, and so price discovery was suboptimal. And finally, there was like a lack of liquidity, right? Resale markets took quite long to process these kinds of transfers and title changes, and they were often limited. And so you as an investor, you had quite a high exposure if you were participating in these markets. So when we came with Artos, we looked at these problems and we picked which ones could be solved best with blockchain and the sort of Lego blocks we had. And we kind of came to this as a value proposition. So the first thing we were able to do was streamlining trade confirmations. We created a single virtual data room that was completely auditable. The data in there was tamper-proof, where all of the information about the mining project, throughout its life cycle, its milestones, when funds were being distributed, all of that was stored, and all of the relevant stakeholders were notified in real time as soon as a document was added. So there was no more kind of linear and forwarding of information. Everything was auditable, versions were controlled, and everyone received all of the information at once, including investors were relevant. Data reconciliation could be performed automatically with blockchain-enabled infrastructure. And that was kind of pushed to stakeholders. So those discrepancies because of duplicated data in different systems no longer existed. And finally, we created new approval processes, new ways of doing electronic approvals in this sort of singular digital realm that could be audited and could involve multiple stakeholders. And everyone was kind of notified when they were required to perform an action, and none of these kind of processes could be bypassed. So it just gave a lot more security to the overall sort of process. The second thing we did was reduce the investment risk. And that was, again, because we were able to give investors real-time updates on project process, due diligence reports, show them when funds would be distributed upon certain milestones being hit, and show them the approval processes for some of these milestones actually coming to fruition. And finally, the system, this sort of trading infrastructure, tracked historical asset prices over time. So you could kind of collate it all into one realm and perform your analysis there. And because of our ability to leverage the blockchain as a trusted registry of ownership record around different assets, and allow the blockchain through token transfers essentially to regulate ownership changes and make them much faster, we could create more liquidity for these investors and allow them to open up new resale markets for these investors to be able to transfer these assets, etc. Again, further reducing that risk for them. And finally, we created new opportunities for continuous mine financing. So what I mean here is we created a new asset class where we thought to tokenize the future yield of the mine, right? So in that initial due diligence that was performed about the project, there was an expected minimum yield, and we allowed the mining projects to issue certificates for investors to purchase that would be linked as a right to a portion of that minimum yield, right? So there's already a buffer there just in case something went wrong. But the investor wouldn't have to purchase the metal itself or invest equity into the mining company and get exposed to that operational risk. They could have a right to the underlying future yield, and therefore, really have a direct value correlation to the commodity itself. They could purchase these certificates that represented that yield and then resell them on secondary markets, all the while the mining company gaining a cut of this over time. So there wasn't one big upfront funding round at a suboptimal valuation for the mining company, but rather a new market for speculative investors to participate in that benefited the mining company all the way through the mine project and gave them continuous financing. So that's kind of what we did. And the way we did it was like this. As I said, we have these modules of functionality, and when we looked at the problems, we picked out a few of them that could be combined to form this solution. So the first one was configurable approval processes around data or transaction execution that existed as a bit of functionality that we could provide. The second was this concept of asset tokenization. So tokenizing and creating a digital asset that represents some kind of physical inventory or future yield or what have you. The third is a secure and auditable document and data repository, whereby people could store documents there, access control could be managed, documents could be auditable, and version control was enforced. The fourth is this marketplace for certificate trading. So this resale market I spoke about before, with fixed or market-based pricing. So people could trade these tokens, and ultimately the owner of the underlying asset could receive cuts of these resale payments over time for continuous funding. And finally, it's that traceability piece around the asset lifecycle, which I know many people have spoken about today. Very similar concept of creating and tracking these milestones and submitting processes for what happens once a milestone has hit some custom business logic. So I'll try and show you this in action. This will require me to stop sharing my screen for a second. Okay. Just wondering if you can see this. Tanya, do you mind letting me know if you can see?
We're seeing it now, yeah.
Excellent, okay.
Brilliant.
Yes, so this is a small demo that we have of the project. So as you can see here, from a sort of mine owner or administrator perspective, you can create a new project to allow the issuance of these certificates that represent some kind of future yield. And the important thing to note, again, is all of this information, this due diligence information, this asset prospectus information that you have to upload at the beginning, the size of that minimum deposit with a buffer, and then how many certificates you want to issue and allow to be tradable around, that represent this deposit, right? The other thing you can do, of course, is first of all, configure approval processes. So if an investor wants to purchase a certificate, maybe there's a bank representative that must approve this upon receiving the fiat transaction. And And you can define milestones as well, or checkpoints during the asset life cycle that sort of must be reached for either funds to be drawn down, or perhaps that just give investors visibility into the progress of the project. And again, you can configure approval processes and choose who has to approve these things. Maybe it's a service provider like Deloitte, maybe it's a law firm certifying that certain KYC processes occurred, what have you. So yeah, that's kind of how that works. I've just put in dummy data already, and you can see an instantiated project here. Again, if we look at the milestone data, what we can then do is say, okay, well, as the project owner, actually, yes, this evaluation stage has been reached. And what that would do is it would trigger some kind of user or employee to have to upload the file, the proof that this milestone was hit, right? As per the process that was defined in the beginning. They upload the file and submit it. And then we can go to the assigned approver who has to review that this milestone was being hit, right? And they can download the report. And once they've checked it, they approve it and they submit this. And of course, what you can see as the project owner, if you go back, is actually that this milestone was hit. And again, as the investor, you can see this as well. So you can see, of course, all of the prospecti and information, but then as the milestones are hit, as these approval processes occur, as the data is uploaded, you can see all of the relevant information so you can perform your proper risk assessment. And one of the benefits here of the blockchain is this ability to fingerprint documents in a secure way so that you can prove that no one's manipulated it after the fact. So what you can do here as an investor, make sure no one's being fraudulent towards you and manipulating these documents. You can download it and actually perform a cryptographic function that sits behind this button to verify the integrity of the report you've downloaded and make sure you're looking at the right thing at the right time. So you can see the file here being verified. So again, as an investor, let's say you want to purchase some of these certificates. We can show now, I'll briefly show you as the final thing, the approval process of the bank representative to actually approve the execution of this transaction. So I've just pretended to purchase the asset. Now I'm the bank representative on the project. I see this transaction, pending transaction coming through of this investor that wanted to buy 300 certificates. And then I can upload the sort of transfer information, the proof of receipt of the funds that I've received, and again, approve the transaction. And that will be the way the title changes and the actual investor gains that ownership. And again, because all of this is happening with these approval processes in this single digital realm, you don't need any kind of data reconciliation requirements in different systems. It's all happening here. So that's it. That's how the demo works. It was very brief, but of course, I hope it highlighted sort of what we can do. So in conclusion, we built a specific solution by leveraging our Lego blocks and stacking them in a certain way for a particular client's needs. But we can combine these or extend this functionality to solve similar or adjacent problems. So thank you so much for your time. I look forward to questions. And if you want to chat, you want to learn more about this solution, please get in touch by emailing me at annika01@autos.io. Thank you very much.
Great. Thank you very much, Annika. Very good to see again, the insides of the blockchain, solution, because otherwise it just is too hazy, when you don't actually see what will be on your screen when you have the blockchain implemented. So that's great. would be great also to hear some of the use cases stories, what was difficult, what was good, because you don't only work with the mining industry, you work with other industries. How does mining industry fare compared to others? Can you quickly say that?
Yeah, sure. I think so. I mean, when you think about the yield that's coming from a mine, right? It's fungible assets. So each ounce of gold is the same as the next ounce of gold, if you will, right? But there are other use cases where you have non-fungible assets. So, for example, one of our clients is actually in agriculture, and we work with them to trace the sustainability standards that they adhere to around certain batches of well, for them, it's groundnut that they produce. And obviously each batch is different than the other one. It goes through a different route. It's purchased by a different person. It's stored in different ways. And therefore, we need that non-fungibility. So that's another way of, leveraging that building block of the sort of traceability, but for a slightly different use case. Another interesting one that might be relevant here as well is the same kind of marketplace functionality applied to in-game items, so virtual goods. If you consider a video game and the items that they have on there, we facilitate these sort of in-game economies and allow the game developers to profit from this by leveraging that Lego block of the marketplace. And again, this non-fungible asset concept, because of course a virtual sword in some game is not the same as the virtual hat, right?
Yeah. No, I learned about that, and that's another fascinating whole big area. I have a gamer son, so definitely talk to him about that. Yeah.
Fantastic.
Okay, well, it's great. Thank you very much. Everything has been recorded, so will be available, and your contacts will be happy to share with all the registrants. Okay, thank you very much, and we'll speak later.